Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I am Amar. The headlines. Monday blues for Indian markets as both benchmark indices trade with cuts. Nifty slips below the mark of 11,000. India wicks advances. Open interest surges in PC Jewelers. Traders take fresh positions in its stock futures. Dr. Reddy's is the top loser on the Nifty after a US federal court bars the drug maker from selling a generic version of opioid addiction treatment drug. And the street is factoring in strong volumes growth from HUL when it comes out with its quarterly numbers later today. With that, let's take a look at the markets, which at this point in time, we're looking at a little bit of weakness. Of course, the Nifty, as I've already mentioned, is trading just a notch below the mark of 11,000, or rather, it has come back above that, but it is around the 11,000 mark at this point in time. The futures, of course, with very little premium, with nearly 2 weeks to go for expiry. That said, when it comes to the Nifty banking futures, well, selling is a little more pronounced there, down by as much as 0.6%, so some weakness seeping in when it comes to the banks. Again, let's take a look at some of these key movers as well, and perhaps we can take a look at how the options strikes have panned out and which are the ones which are most active. And as you can see on your screen out there, we're starting to look at unwinding in the 10,600 put, even as we start seeing a little bit of weakness coming through. On the other hand, more and more writing coming along the 10,900 and the 11,000 calls, and perhaps a little more writing around the 11,100 mark as well. So a lot of traders are taking this opportunity to start writing a little more on the call end of things. How does it stack out when it comes to open interest distribution across different strikes, and when it comes to your max OI? At this point in time, we are certainly looking at your 10,600 put along with the 10,700 put with the max OI. Considering the fact that we've seen a little more traction today in the 10,700 put, that's actually taking a little bit over of when it comes to maximum open interest. But on the upside, you continue to see max OI with the 11,000 call. But as I was mentioning earlier this morning as well, this scenario is likely to change should we see the Nifty continue around the 10,000 or rather the 11,000 mark, which means that we're likely to see this maximum OI shift to either 11,100 or 11,200. So let's wait and watch. It also completely depends on what our experts have to say about this change in the scenario. But at this point in time, do also remember that the Nifty put call ratio as of yesterday stood at around 1.79, and this is usually this indicates just a little bit of an overbought market. Of course, this is all based on theory, but we're going to take our experts' view on this one as well as we move into trade today. Finally, let's talk about some of these active stock futures in today's day of trade. Of course, I've already mentioned that PC Jeweler stands right at the top, and we're looking at a surge of as much as 12%, even as the stock takes a knock of 20%, now below the mark of 100. In fact, at one point in time, had moved down below 90 per share as well. Dr. Reddy's, again, 9% cuts coming in there. A substantial weakness coming in through there as well. Of course, this is owing to its developments in the US at this point in time. Apollo Hospitals, another 10% surge in towards weakness. And it is the same for Cummins India as well as DCB Bank. All of them are looking at substantial weakness in today's day of trade, even as we see a surge in open interest. So a lot of weakness and a lot of shorts, as a matter of fact, in the broader markets. So we're going to continue to watch out for some of these names as we move into trade. Are we looking at too many stocks with unwinding? Not as much. Well, Federal Bank is one of them, which is looking at a little over 1% decline in open interest. Yeah, so longs unwinding there, but not too much to speak for when it comes to Oracle Financial. Jet Airways, of course, do remember that one is in the F&O band, went into the and Repco Home Finance along with PTC India. So on the whole, these are just some of the stocks that we're keeping an eye on today's day of trade. And with that, we're going to get in our experts for the day. But before I do that, here's a reminder that if you have any queries regarding futures or options markets, you can call us now on 022-4540-4141, or of course write to us on Twitter, Facebook with the AskDQ hashtag. And on that note, I'm going to take this moment to welcome in our experts for the day. We have Amar Singh of Angel Broking and Chandan Taparia of Motilal Oswal. Good morning, guys, and thank you so much for joining us. Chandan, I'm going to start off with you. I just want your view at this point in time. We've seen the Nifty surge recently, well over the mark of 11,000. Positive, negative, consolidation. What's your view? How are you approaching these indices at this?
Yes, very good morning. If I look at the price movement, market which was continuously making higher lows in last 8-9 trading session, yesterday it is slipped below the previous day low. That's why some selling is visible. But yes, on weekly chart on last week, it has given a breakout beyond 10,929 zone. So daily indicates some dip could be seen, but weekly indicates dip would again bought in the market. So again, buying interest could emerge, buy on decline will be strategy. On any decline of 20-30 points will be the buyer in the market, with major support of 10,949 and expecting it to move towards 11,080 kind of level. Now looking at the database, put call ratio was at 1.79, that is a historical high. We have seen fresh put writing at 10,000 strike, which indicates that 10,929, 10,950 would be the support. But highest at the maximum call open interest is intact at 10,000 strike, and that is the reason that market is hovering near to 11,000 zone from last 2-3 trading session. So unwinding is required in 11,000 strike. That in that scenario it can again move to us 11,080, 11,171. That is the lifetime high. So yes, the approach will be buy on decline till it holds this major support of 10,929, and we are looking for an up move to us 11,080 after a dip. So again, buy on decline will be a strategy here onwards.
Okay, Chandan, I just want to employ you a little more on the point that you made on the unwinding of options around the 11,000 mark. Can you specify, are you talking about calls or puts, and how you expect this to unfold with a little more clarity?
Yes, looking at the option database, see what we understand that option writers are quite a smart player in the market. Buyers are also trying to follow the same in the current scenario. Maximum put open interest is at 10,600, that is intact there, but fresh put writing started to seen at 11,000, 10,900 strike. If I look at the immediate change of last 2 trading session, 10,000 put has seen open interest addition of around 7 lakh shares, but at the same time maximum call open interest is intact at 11,000, near to 30 lakh shares, while second highest is at 11,200, which is near to around 30 lakh shares. So if some unwinding on call side happens at 11,000 and fresh call writing happens at 11,200, which will give the sign that yes, market is now giving a scope for a move towards 11,200, and we are expecting the same because of the put writing and call unwinding at the immediate strike, and that's why the broader trading range of the market is likely to be between 10,929 to 11,080 and 11,171 kind of level.
Okay, fair enough. Okay, so there's some crucial points coming in through from Chandan when it comes to his observation in the market. I'm going to bring in Amar in as well. Amar, good morning to you as well. What do you make of your observations when it comes to markets at this point in time, when it comes to your approach on the benchmarks?
I would say a very good morning to you, Agam. What we definitely see is that last week's rally and today also the market is holding up. So clearly reflecting that there is a mindset change, and earlier which was towards more of any pullback was being used as a shorting opportunity. That seems to have waned off, and also the way Nifty took support around 10,550 levels. So clearly reflecting that there is some buying interest in the markets, and also Nifty, because earlier recent high was 10,929, 930. So that being taken out, Nifty sustaining above that level. And technically, if I look at the charts, clearly it shows that the short-term trend definitely remains extremely strong. The medium-term trend also is positive. Long-term trend, I would say, is positive, though the bullish momentum has been on the decline. But still, the probability of trade being on the any correction should be used as a buying opportunity. And if you look at the data, OI data, again, I would say that earlier in the puts, it was in the put, the maximum OI was around 10,600. That's moved to 10,700. And if I look at the calls, that's around 11,000. So clearly reflecting that there is some interest in the buy side. So we would recommend a buy anywhere towards any correction towards 10,970, because that's technically a very strong level. Today also this morning it bounced back from 975 levels. And the stop loss needs to be below 10,920. So precisely the stop loss will be around 10,917 and the target of 11,047 on the upside.
Amar, I want to take up the point with Nifty put call ratio with you as well, considering until yesterday it was at around 1.79, which was at a historical high. That said, what are the changes that you would be looking for in the crucial strikes that could aid you or aid the traders out there in deciding the near-term direction, especially keeping the expiry in mind?
See, what we need to understand is that we've got still almost 2 weeks away from expiry. That's one. So, so there is a gradual shift. If you look at the put also, you see a gradual shift in the put, the maximum OI in the put, as I said, and also as you rightly said, the put call ratio is extremely high. So that also reflects that there is a lot of puts being in the market. So clearly reflecting that there could be some volatility going forward. So one really needs to be cautious. As I said, on the downside, 10,900, 930, that should act as an extremely strong support zone, and on the upside again 11,080, 11,100, that should act as an immediate resistance. So it's going to be some volatility in the market, so one should be prepared for that.
Okay, well, so that's as far as your approach to the benchmarks goes. But with that, let's carry on and talk about the different stock futures that will be in focus for our experts. So Chandan, coming back to you, what stocks are you keeping an eye on and what would you trade?
Yes, better to be with selective heavyweights counter, which are continuously forming the positive price pattern. So first it is buy on Bajaj Finance. The stock has recently given a breakout from a symmetrical triangle or the pole and flag pattern. So momentum to continue. 24.25 is the support, which can now shift to 24.35, 40 zone. Upside looking for 25.55 kind of target. Second is buy on Asian Paint. We have given a breakout from pole and flag pattern after the consolidation of last 4 trading session. Major trend is positive, so Asian Paint can head towards 14-15 kind of level. So 1415 is the target. One can buy with a stop loss of 1360 levels.
Okay, so two ideas from the large cap space coming through. Amar, how about you? What stocks are you betting on today?
I would say one is from the banking space, and that is Kotak Bank. What we're seeing in Kotak Bank is that this continues to hold and trade firm. And yes, it has been some consolidation towards 1380 levels, but I would say that still technically speaking, Kotak remains a strong bet. So any pullback towards 1385, 1390 levels, that can be used to initiate a long position with a stop loss of 1363 and a target of 1439 in the short term. And the second stock to look at is Asian Paints. What we are seeing in Asian Paints is that Asian Paints has been on a continuous roll from almost 1250 levels, currently around 1391. And if I look at this stock technically, it has had a major breakout and also it continues to hold firm, and even from a short term and medium term perspective, the stock appears to be extremely strong. Yes, it is in overbought zone, but that shouldn't be a cause of concern as long as the trend momentum, the upside trend momentum remains strong. So any pullback in Asian Paints towards, currently it's around 1390, so pullback towards 1370, that can be a very good level to buy with a stop loss of 1344 and a target of 1416 on the upside.
Okay, Amar, do you want to talk about your short call on BHEL as well?
Yeah, BHEL is one stock. If we look at BHEL, what we are witnessing in BHEL is that this stock is yet to form a bottom, and we've been continuously looking at it from a sell side because it did form some support earlier around 68 levels and then bounce back, but it's not able to sustain. And even if I look at the stock from a short-term perspective, the stock continues to remain extremely weak. Yes, it is in oversold territory, so there is a possibility and probability of a pullback. But again, that pullback will be used as a shorting opportunity because it's yet to form a base. So any pullback towards 67, 68, that can be a very good level to short with a stop loss of 69.50 and a target of 62.5 on the downside.
Okay, the stock that's standing out for me from both our experts is, of course, Asian Paints, and both our experts are putting a long on Asian Paints at this point in time. So, and it certainly looks good. And while it has been acknowledged that it is an overbought zone, there is a possibility that Asian Paints could move higher from these levels and showing a lot of strength. Actually, its underlying is just about 7 points away from the mark of 1400. It's advancing by as much as 1.8%. While it's not looking at too much of a premium, its open interest, well, once again increasing by another 2%. So there has been long interest when it comes to Asian Paints. The other stock, of course, as Chandan mentioned, I believe, is Bajaj Finance. Bajaj Finance is the other one, which has been going from strength to strength, and yeah, there you have it. That's just short of the 2500 mark at this point in time. Again, up about another percent, and well, we're seeing an open interest increase of around 2.8%. Okay, so these are some of the stocks that our experts are recommending, but let's pull up Infosys and see what it's doing, because now it's picked up steam. Infosys, of course, it has come up with, should I say, mixed earnings, but at this point in time, it's up as much as 4%, and one of the leads when it comes to the Nifty 50 index. There is buying interest at this point in time, and it's well above the mark of 1373. Like I said, we've had some weakness when it comes to our operating margins, but when it comes to the top line, largely in line with consensus expectations. So a lot of strength coming through. Chandan, can I take up Infosys with you at this point? How are you viewing trade? I reckon you will be positive considering the kind of momentum that we've seen, but then that would probably be on the long run. How is it looking to you in the short run if someone were to take fresh positions in Infosys at this time?
Yes, on 15th of June, it was finding hurdle near to 1275, 1280 zone. And in the last couple of days, it has exactly taken support at 1275 zone. So classical example was made of that previous resistance has provided support, and today in the opening, it was forming the higher lows near to 1290 and surpassed the immediate hurdle of 1340 zone. So that's why the momentum continues. So I think this stance of the positivity to continue. And what we believe that IT and FMCG are the sector which are forming overall strength and showing multiple positive price pattern on the counter. We have seen some call writing, so unwinding also started to happen. So what I believe, on a small decline near to 1345, 1350, one can accumulate for an up move towards 1380, 85 kind of zone in the counter.
Okay, and the other stock that I want to address before we start taking queries is Dr. Reddy's. That one is taking a knock. Again, this time around, because of negative developments with respect to Suboxone, and well, it's not doing very well. It's down by as much as 8.4%. At this point in time, a surge of 13%. So a lot of shorts building up. Amar, can I take your view on this one? I reckon you will not recommend anyone to go long on this stock. That is my guess. How would you approach this one? What if someone were to take fresh shorts at this point in time in Dr. Reddy's? What would you advise them?
Yeah, looking at Dr. Reddy's, what we are seeing is that Dr. Reddy, from a short-term perspective, it has been in a consolidation since, I would say, the last week of June, more or less. So clearly, it's been more than now 3 weeks where the stock has gone in for consolidation, and it has breached that crucial level of 2150, 2160, which was acting as a crucial support. So I would suggest that one should ideally wait, because at the same time, somewhere down below 2100, that's a very crucial support for Dr. Reddy. So one should watch out for this level, because from a medium-term perspective, the stock, I would say, is in neutral zone. So it's not very, I would say, strong, not very weak either. It does seem to have formed a bottom. So I would say that rather watch out for 2100 levels. If the stock manages to sustain above that, close above that, then there can be some pullback. But on the upside, again, the stock will meet with strong resistance somewhere around 2250, 2300. So it's now getting into a zone of 2100, 2300 zone. So the trend which we were witnessing earlier in Dr. Reddy's, that seems to be over, at least from a short-term perspective, and the stock goes in a consolidation zone.
Okay, so I'm going to move on to queries, and incidentally, our first query is on Dr. Reddy's. We have Girish Kumar, who suggests that he's bought Dr. Reddy's at 2,365. And his question is actually quite simple. What should he do? I assume that at this point in time, he is looking at a substantial loss, considering the Dr. Reddy's July futures are trading at around 2,122. Chandan, how would you help Girish with his position? He is losing out approximately 200 points on his futures position. How would you advise him to tackle his situation at this point in time?
So the stock is down by around 7.5% today, and added open interest nearby 12%. So clearly the shorts are being built in the counter. It has slipped below its 50-day exponential moving average and also broken its major support of 2191 2200 zone. So now what I believe 2200 2190 will be hurdle. So like if he's holding the position in future, my suggestion is better to hedge with 2100 put, because the way it has broken, it may slip to us 2035 2030 kind of zone on the lower side. But if it moves about 2190, then only the stability would be there. But the way it has broken the support, better to hedge and keep a strict stop loss of 2035 or hedge with 2100 buying put as the immediate trend has turned in the pressure.
Okay, so that's the view on Dr. Reddy's. I think we have an all-round view from both our experts on this one, and it's going to be challenging for those who have been long on Dr. Reddy's, at least in the near term. We'll move on to the next one, and I want to address Hindustan Unilever. Of course, HUL will come out with its earnings later on. We're expecting a very strong quarter, considering the kind of traction in volumes that we've seen over the previous couple of quarters. That's one. Second one, of course, is the traction that we've seen in the stock price movement, because it's well over the mark of 1750 at around lifetime highs, and there you have it. It's just advancing by another 1.3%. Its open interest up as much as nearly 1.9%. I think just a few factors, fundamentally speaking, that we need to watch out for in HUL is first the top line growth. Bloomberg consensus, projecting about 13.4%. Margins are expected to expand as well by as much as, I would say, about 110 basis points to around 23%, and consequently profits could rise as much as 20% on a year-on-year basis. But that's as far as the fundamentals go in terms of expectation of the stock. And of course, do remember, a lot of positions will already have been taken on account and in the run-up to the earnings. So I'm going to take this up with the experts, because we do have two queries. First one is from Nikhil Raja. He wants a view on HUL. And the second one is from Ravi Shankar Adabla, and he asks, is it a good time to go long on HUL considering the first quarter results today? So let's take up both the queries with both our experts. So Amar, I'm going to come to you. What's your view on HUL? What are the underlying technicals looking like, and what would you do with this one?
I would say the underlying technicals for this stock remains extremely strong. So what it effectively means is that ideally the results should come out very well. The markets, the stock could witness some volatility, but again, if the results come out well, then we could see a pullback in the stock. Because if I look at it from a technical perspective, from a short-term, medium-term, as well as long-term, the trend remains extremely strong, and not only the trend remains extremely strong, the bullish momentum, that is not showing any signs of decline. So that clearly reflects that the stock, if it witnesses any correction, then it will witness a pullback as well. Because in spite of the stock trading in overbought zone and in an extremely heated territory, if I look at it from a medium-term perspective, it's been in overbought zone since on the weekly chart since April 2018. So it's been a long period of time. The stock has been in an overbought zone, and still, if you see, the stock consolidates and pulls back. So I would say rather wait for the result, because generally what we witness is that the stock trades in either direction, and let the stock consolidate. And ideally, the good level to buy is around 17, 20, 25. That can be a good level to buy, because the stop loss needs to be below 680, and the stock, one can buy the stock around those levels.
Okay, so that's Amar's view on HUL, and he's of course very constructive. Chandan, would you say the same? Are you also constructive on HUL, and what would you advise Ravi Shankar should do? Is it a good time to go long on HUL considering Q1 earnings today?
See, price momentum is continuously to remain positive. The stock is making high top side bottom formation. Derivatives data are showing strength. So he has two scenarios. If he has to buy, he can continue to be with the same, because setup looks quite strong for an up move towards 1800, 1820 level. But he wants to avoid the volatility, then better to buy after the event. Because anyway, the stock is positive, or he can buy in the two tranches, buy now and buy later if there is any dip. But what I believe, now there is no now that 1700, 1720 is the major support. Not expecting to go below the same, but at the same time looking for 1840, 1850 kind of zone in the counter in the next couple of trading sessions.
All right, so there you have it. That's the view coming on HUL, fairly constructive from both our experts. So with that, I'm going to move on to the next query on Facebook, and this is another interesting stock. It's on SPI. Rohit Gupta has, he's just suggested it's quite simple. What's your view on SBI? Can we pull up the futures at this point in time? SBI, of course, has been relatively volatile, if I'm not mistaken. And, you know, it's been taking a little bit of a knock today as well. It's down around 1.5%. Its open interest, well, there hasn't been too much change, but it is taking a knock along with the rest of the PSU banking counters. At this point in time, of course, SBI is trading at around 254. That's whereas July futures are trading. Amar, how would you help Mahesh Gaikwad? I beg your pardon. How would you help Rohit Gupta with your view on SBI?
I would say that SBI right now is still trying to form a bottom because looking from a short-term perspective, the trend continues to be extremely bearish. So any pullback, the stock is likely to meet with selling pressure. An immediate level of resistance is around 258, 260, and above that 264, 65 from where the stock witnessed this sort of correction. Yes, on the medium-term charts, it is showing some signs of, I would say, decline in the bearish momentum. So what I would ideally suggest is that one should wait out for this stock and let it consolidate. If the stock holds above 245, 250 levels and at least for a couple of days, then there can be a pullback towards 264, 65. But again, I would say that you need to be slightly cautious because the stock has not yet formed a bottom in the short term. So there could be a volatile trading session and then the stock could form a bottom. So I would suggest rather stay away, let it witness some consolidation. If it stays above 245, 250 levels, then ideally you can look at buying into the stock with a stop loss below 245 and a target of 265 on the upside.
Okay, so that's the view on SBI. We have a query coming in from Mahesh Gaikwad, and he wants to get a couple of ideas to invest with a short-term view of 34 months. So Mahesh, because you know, this is a short-term show based on short-term trends, I'm going to request my Ask BQ team to take over your query, and we'll have it addressed from some of our fundamental analysts. With that, we also have what seems like a fundamental query. Partha SK on YouTube asks the short-term view on ITC with you know, 3 to 6 months horizon. Partha, again, I'm going to take this query up on ITC on a fundamental basis with some of our you know, guests on Ask BQ. However, we can certainly take an F&O check on ITC. So let's pull up ITC as futures and see where they're currently trading at this point. So you do have an advance of around 0.5%. The thing with ITC is that it has not moved in tandem with a lot of the other FMCG stocks over the previous couple of weeks. There has been a there has been a divergence between ITC and a lot of these other FMCG stocks, which are actually trading at lifetime highs. That's not the case for ITC. So I'm going to take this up with Chandan. Chandan, what's your view on ITC at this point in time? What are the charts telling you?
See, ITC, before looking at the chart, we have to look at the option database, and that is showing a range-bound move with limited upside as well as the downside. If I look at the immediate changes of the database, put writing is seen at 260 strike, but at the same time, call writing is visible at 270, 75, 280 strike, maximum call at 280. So what I believe that 260 is likely to act as a support, 280 will be hurdle. Now looking at the chart, the stock is in a range. On last trading session, it fell down, but exactly taken support at its 50-day exponential moving average near to 270 zone. So one can put a stop loss near to 268 and can trade towards 278, 280 kind of zone in the counter.
Okay, there you have it. That's the view on ITC. You'll be watching out for that one as well. Amar, before we wrap, is there anything interesting that's showing up in your charts beyond the ideas that you already spoken about?
I would say that one can look at TCS. Because what we are witnessing in TCS is that TCS, after a very sharp up move on 11th of July, it has been in some consolidation. So any pullback in this stock towards 1960, 1965 levels, that can be a good level to initiate a long position with a stop loss of 1928 and a target of, I would say, on the upside, the target would be 2035 on the upside.
Okay, and Chandan, how about you? Anything interesting showing up on your radar?
Yeah, what I believe in such kind of market, better to be with very less idea in the selective heavyweights counter. We already discussed about the Bajaj Finance and Asian Paints. These stocks are likely to perform. If someone is to see more trades, then IndusInd Bank, Bharat Finance, Kotak Bank, Escorts might be the ideas. But yes, mid-cap stocks are showing weakness. Most of the PSU bank, most of the metal counter, most of the other mid-cap and small cap are showing sign of the weakness, even Nifty is trading at 11,000.
Okay, fair enough. Well, with that, I'm going to thank our experts for joining us and taking us through their views, as well as solving some of our viewer queries, Amar as well as Chandan. And with that, it's a wrap on this edition of the F&O Show. Lots more lined up, so stay tuned in the Bloomberg Quint.